All right. So I wanted to have this conversation because I noticed a particular, perspective or thought pattern for IPOs recently, right? And well, before I go there, I'll just say that um, an IPO is an interesting time for a company, right? And I think that from what I've seen, companies kind of build up their profile, right? Just from what I've observed, you notice this sort of pattern where maybe the year before a company goes to IPO or the year and a half before, they might have had like their best year, or like there's usually something that kind of makes them appealing to the public, right? I don't know if it's just me. Let me know if you see the same thing, where it's almost like the company presents their best self. There's nothing wrong with that, by the way. I think you have to present a package that is appealing to an investor. And some companies deliver, right? You've seen some companies um, just do this thing where they come to market, they tell you what they're raising money for, they do the thing, and they grow faster than you thought they would grow. And then you have some companies that come to market, they tell you that they're going to do a ton of stuff, and you don't really hear from them. You don't know what's happening. And it's interesting because this is my perspective, right? And it depends on how things are going. But if it's a junior market company, that junior market company should be focused on one thing, and that's growth. It doesn't matter what they say they're using the IPO funds for. If you do not believe that company is positioned to grow, to me, that IPO doesn't make sense, right? But I want to talk about what that growth can look like, which is the point of the video, right? So there's this narrative or conversation I see around persons having a problem with companies raising capital to clear debts. And I want to hear what you have to say about it, right? We're not just talking about the most recent IPO either, because I've actually seen this a few times before, right? So, the reason why I put APO in the title is because we know of one company now who is going to be issuing APOs specifically to clear their debt. So it's pretty much the same thing, right? Do you believe in this concept of using, capital to clear debt? So let me know before I get into it. Let me know what you think about that. But that's what I want to talk about. I'm gonna try to keep it brief. But I was saying something before, which is that I think once you're a junior market company, your only function in life is to grow. If the company is not going to grow, if you don't believe you're reading that prospectus and they're positioned to grow, then it doesn't make sense. You can't go on a junior market to just kind of languish, right? And I'm saying this with all the respect and whatever is due, because it takes a lot to run a company, which is another conversation as well. Because I also see sometimes the narrative around companies who struggle. Now, I have nothing wrong with a company who takes a shot, goes all out, and then they have to pivot. There's nothing wrong with that. There's actually, I think, a certain level of respect I have with them for it, because I'm trying to build a business now. I've been an entrepreneur for 24 years. I understand what it's like to have a really good business and things are going well until they're not, right? But I will say, if you're going to be raising 200, 300, 400, 500 million, your only focus should be growth. But it's interesting, this thing that I've seen where companies aren't necessarily raising a lot of capital either, which is there's so many things I want to talk about actually as I'm saying this, right? There are lots of nuances to how I'm seeing capital being raised, which is quite interesting for me. let me see what some of you guys are saying. So Kimara is saying, I think the strategy Atlantic is using is great to make a profit. Clearing debt faster results in more profits in the long run because they're paying less on interest. Okay. Sean says, I think it depends on the company's revenue. The higher the revenue and net profit, the more okay I am with it. In terms of them using debt, is that what you're saying, Sean? Let me know. And Kurt says it depends on the use of debt. What do you mean? Use of debt? Yeah, I mean, as in why they took the debt out in the first place. Okay. Sean says Atlantic revenue isn't bad, for example. Okay. Okay, I'm not seeing any other comment. Let me check on Instagram. So yeah, so let me try and focus on why I'm live in the first place, right? So using IPOs to clear that. So since we mentioned Atlantic, I look at theirs first. But there was another one. I think it was Ari Williams. Let me try and find Ari Williams first. I think Ari was it? That's what Ari Williams raised funds for. Who was it? Was it Omni or Ari Williams? I don't remember. There's someone last year, I think, was using funds to clear debt as well. So let me just try and find the prospectus. Give me a minute. Please bear with me. Let me just share my screen so that you don't feel like you're just looking at me looking. So I'll ask you as well, what do you think would be acceptable for a company to raise money for? Tell me that as well, right? I think it was Ari Williams, but I'm looking for the use of proceeds. Did they show it here? Use of proceeds. Company tends to will be used related to part of the shot. Okay, so they're pretty much yes. Okay, Ari Williams is here. Okay, I thought I was sharing my screen. Apologies. So Ari Williams, this is Ari Williams prospectus, right? It says here, use of proceeds. A company intends to use anticipated proceeds from a successful invitation for the following purpose. Approximately 113 million to be used to eliminate related party loans. Approximately 190 million to be used to eliminate short-term loans and payment of the expenses of the invitation, so on and so forth, right? So this is what, 303 million of debt, right? So that's what they're using the proceeds for. Let me find Atlantic's now as well. Let me drop that in there. And let's see what Atlantic's use of proceeds are as well. Listen, by the way, I see that comment in the chat. Anybody asking me about Dolphin Cove, I'm going to block you from YouTube. I'm kidding. I'm kidding, guys. I'm not talking about Dolphin Cove tonight, though. All right, so that's for another day. All right, so the company estimates that the net proceeds of the invitation will be approximately 469 that are deducting listing expenses incurred. Some of the companies will use the proceeds to repay existing indebtedness. You said one GS as well? Okay. One Great Studio IPO prospectus. So I'm raising it here because I want persons to say how common it may actually be, right? And I think it's good in some cases. I think it's bad in some cases, right? So let's see their use of proceeds. Sorry, I'm doing some fast reading until I find. I want somebody to sponsor me a screen, man. I need another screen. Okay. All right, so it says proceeds will be used to pay the invitation and listing expenses, and the remainder will go to the company to be used for reducing the debt owed to Barita Investments Limited, strategic growth initiatives, and developing human capital. So they actually said they're using it for multiple things, and I think I saw Javane mention in one of the videos that they did that they had cash left over from the IPO that they were able to use for the DRT acquisition, and they've been having conversations with them for about a year now, right? So I think they listed the year before in 2023. So they've been working on the acquisition. So for them, strategic growth objectives, that was met. It just didn't, I guess, materialize within the first year, right? So who else? Who else? Yeah, I'm not talking about Dolphin Cove tonight, guys. I'm getting counseling for Dolphin Cove. I need help. You know, persons are sending me messages and wishing me well. Again, I'm just kidding. But I'm not interested in talking about Dolphin Cove tonight. Who else used? Trying to think of another IPO that used. No, okay. So let's use that for now. I think there's one more that I wanted to raise. I can't remember the company now though. Sassy Yard is saying on Instagram that bought Ari Williams IPO and still waiting for it to go over $1. I will say something about that another time. All right. So yes, I also wanted to have the tropical offer here, right? Tropical battery. And I'll tell you why. Hold on a sec. Because we know that they're going to be issuing an APO, I think, based on the resolution that we saw for the annual report, I believe it was. And so let me see their last report. Is this the right thing? Am I looking at the right thing? For the first quarter, no, that's not it. Didn't they release a report recently? Or am I mistaken? Or was it their annual report they released? It wasn't their annual. Ew. Okay. So in Tropical's case, I'm just gonna go to their yes, I think there's a resolution here that speaks to, yes, okay. So resolution number 3, the company hereby authorized to issue new ordinary shares by way of an offer for subscription to the public hearing prospectus to hear an additional public offer in lieu of a rights issue to existing shareholders. The board, It doesn't say how much they want to raise or anything like that, right? But it says additional public offer there, all right? So they're hoping to raise some funds, and so I want to look at their statement here. I actually didn't read the report yet. Maybe I should read it. I don't know if they mentioned how much they're looking to raise. I should probably ask. Okay. So I'll go to, just want to go to the revenues, right? Okay. So in their case, I'm going to focus on the finance cost, right? Because the finance cost is the reason why they're raising. So total finance cost is this line here up top. And that finance cost for last year, 374 million, right? If they did not have that finance cost, right? So they had 56 the year before. So pretty much if you take that 300 in finance costs, add that to their profit, they would have like just a massive year, right? But again, not not going into that right now. We're talking about using IPOs or APOs to raise debt, right? And let me see what this person's saying. And Atlantic could be a potential good dividend stock with their promise of a 40% profits going to dividends. Okay. All right. So, okay. So let's talk about this, right? So, when would it make sense to use an IPO or APO to clear debt? So let's go through a couple of them, right? Or at least the ones that I can remember, right? So we can actually, so I didn't plan to do this part, but it may make sense to it, right? So we saw where 1JS raised capital to clear the debt that they got from Burrito to be able to pay, I think, for the HVSEO acquisition. And I believe we saw the impact of HVSEO on their books, but I need to look at the most recent results, because what I'm trying to do here is, so for Atlantic, we don't know what the future holds, right? We only know what the prospectus is showing us now. But what I'm saying here is, what you want to, again, for a junior market company, what you're looking for is just their ability to grow. Short version is, I don't think it matters if a company is using the IPO or APO to clear debt, once you know that the company is positioned for growth. So we know, for example, in Tropical's case, again, we don't know how much shares they'll be issuing in Tropical's case, but you see the impact of what they would be able to provide if they did not have that debt. And I think it's the same for Atlantic's case to an extent, right? Because I think Atlantic, well, a few things. For Atlantic, I think, of course, they would have had some costs in the year as they prepared for this transition, right? Companies usually know a year or two before they're going to market, right? They don't just have a good year and happen to go public. It's something that they prepare for. And that's why sometimes you'll see something shared in the paper that a company is going to market, and year or 2 years, you don't see anything, and then you see something that seems out of the blue, but it's quite a long process to prepare the company, get the proper paperwork, get the proper infrastructure in terms of the structure, the board, etc. And just to kind of prepare in terms of what it takes to list. It's not a simple process. So it usually takes some time, right? And as I said, you usually try to position yourself to list at an ideal time. Like, you're not really going to see a company list when they've had a down year, or usually there is some form of explanation as to why this year may be different than others, right? So in their case, let's look at just the profit and loss. Trying to find it. All right, let me know if you guys have any questions, by the way. I don't know if I'll be doing a full prospectus review, unfortunately, for Atlantic, so it depends on time. So we'll see. Why am I not finding it? Is that it? Okay, I think, all right, here we go, right? So in their case, we are looking at, well, this goes to 2023, and I think they showed their 9 months, 2024. Is that what they had? Why do I feel like it's the first time I'm reading this prospectus? Guys, remind me, please, did they have the 9 months for Atlantic? Okay, here we go. Yes, I knew they had 9 months. Okay. So when I look at the 9 months for Atlantic, what I saw was, because if we notice here, they had a finance cost here for 100 million, right? So I believe they're $1.3 billion in debt. And I believe they're going to be able to clear a portion of that. Not all of it, but a portion of that. I think the bond is going to be converted to shares on JMB side, and then they're going to net 467 or 469. So that's about 700 and something out of the 1.3. So they'll still have some debt, right? But if you add what they would save here to this, that's, you know, actually a little bit less. So let's say you add, I think the CEO said 94 million is what they'll save. So 94 million to the 62 is 156. So they will be 20 million shy of the year before here, which means in one quarter, well, that's same 9 months. I think we could look at the full year for 2023, and I believe that was 147 if I'm not mistaken, right? Or something. I don't remember the numbers right now. I don't know if it's because it's late, but something like that, right? So if they are able to actually realize that in profits, and then of course we know the fact that they have the 40% dividend yield, my concern is I'm not fully sure what the growth prospects are going to be, and I don't know if that was adequately addressed in the interview that I saw on Taking Stock, right? And as Sylvain said, don't forget about the 30 million fees for the directors going forward. There you go, and the listing expenses and so on. So I think the question is, how much can they grow once listing? Yeah, all fees go for a listed company, right? So they get the tax break, you know, which is great, right? So they're going to be saving that 20 million, right? In tax expenses. So I think if we add this as well, then they will pretty much surpass that, right? Sean is saying Edifocal and Spiritual use some of the funds. Yeah, so that's the point I was making, where it's actually very common. So when person said they don't like it, I think there just has to be a context as to when it is used, right? Because you have to ask yourself, what is the funding allowing them to do? Now, I will say what I like about in Tropical's case. So no, I do understand when persons say they would rather the IPO or APO be for an acquisition, because with an acquisition, you're essentially going to be able to grow revenues. Depending on the type of acquisition, it could just mean an amazing growth in terms of profitability, right? And on that note, I'm actually waiting to see what it looks like for One Great Studio with the DRT acquisition, because two things stand out to me with that. The price stands out to me, and if the price is what it was, my question is, how much would they add to the bottom line of the company? So I do see a lot of great synergies there, but my question would be, how much will they add to the bottom line? But we're not really talking about OneGS in that regard right now, right? So Kimara said they mentioned growth. He mentioned supplying to major contractors and to Caribbean countries. I heard that, but we don't have any way to quantify that. Understand what I'm saying? So that is my concern, where that I don't know how that is answered. Meaning we just literally have to wait and see, right? So that is the thing that so let me try to answer the question, because I don't know if I'm tired. I don't know if I'm tired, because I don't know if I'm making sense. All right. If I'm not making sense, I apologize. If I'm not making sense, I apologize. I'm trying to find something on my desk. So if they're able to grow, because so remember the premise that I'm coming from here, and I'll try to get to my point now. The premise that I'm coming from here is that a junior market company should be positioned on one thing: growth. Now, I do believe that in Atlantic's case, they have the management team, they have the board is well experienced, right? I think there are a lot of like synergies within their ecosystem that there are some things I'm thinking about that would be great opportunities for them a year or 2 3 years from now. What I'm not sure of is now what that looks like. I wish companies gave you some projections for growth. So you see, like we're in the US, they'll give you like estimates. I wish our culture for listing gave estimates. Now I do notice, which company was it? Was it Edifocal or One-on-One? They gave us estimates, and of course, it was either or both. I don't remember. And I don't know if they were able to live up to the estimate. And so in that case, somebody may say, well, I don't want to give an estimate and I don't live up to it. I think the estimates should be given anyway, because I think the estimates help you to have an understanding as to what the company is aiming to do. The estimate gives you a goalpost to reach for, because if you are projecting a certain level of growth, it tells me how aggressive you're going to be. If you don't give me a projection for growth, I have no idea, right? So I'm still kind of going in blind, because past performance is no indication of future performance. So I don't know that I'm going to invest in a company at the IPO stage and they will be able to grow in the way that they are projecting, because so many things can go wrong. But that's why you look at other factors. Of course, the business model of a few persons have maybe, for example, raised concerns about, like, let's say the industry, like they don't know, how it will perform, how much clients, what's the size of the market, etc. So those are things to think about. But I think, for example, in Tropical's case, we see the impact of what they used the money for. Now, in their case, they were able to grow their revenues they're able to double their revenues, right? Let me show you Tropical. They were able to double their revenues. So if they're able to take on debt and double their revenues, right? And up until this year, they were actually doubling their dividend every year. So I'm actually anticipating that they're going to be able to double that dividend as well. Of course, they're going to have more shares issued. So there's also that. But if they're even able to cut this down in half, this is 190 million. If 190 million comes off of this, add to this 33, that'll be the most money they would have made ever in a year. All right. But because I don't know how many shares are going to be issued, I don't know what the EPS will look like, and so I don't know what a potential dividend yield will look like. I don't know that math, and I guess that's what the APO prospectus will say to us, right? But in this case, the point I'm making is we know what the impact of raising the additional funds would do, right? Now, they could have gone about it a different way, meaning raise the money first, then do the acquisition. I actually don't mind that. Same for OneJS, where they did the acquisition first, then they came to market. So you actually saw the impact of the acquisition before. Now, they had, I think, a situation where their industry was a little dynamic, and so there were some things that I think some persons were concerned about, meaning like the SEO space and AI and all of that stuff. But we saw the impact of their acquisition as well. I think for Ari Williams, I'm not sure. I haven't looked at their most recent financials to see what they were able to do after. Well, I guess I can check this now, right? Let me see, Ari Williams. So my point here for those who are just joining is that if you're a junior market company taking on capital to clear debt, it should streamline the way to growth, and that growth to me should be above average growth. It should actually be better than all previous quarters that you've had. How come we can't find the report? That's okay. That's unusual. I wonder if the JC or have they not published, guys? Have Ari Williams published anything? Have you seen any Ari Williams report? I know sometimes when a company lists, they're not always required to publish reports based on when, but I can't imagine that they haven't had any reports since, because I think they listed okay, August last year. Are they not required to publish any reports? Okay, so I'm not seeing any, only a Q2 report, but I'm not finding that. Ari Williams. I'm sure I saw a report for them or something. December 2024. Okay, so they probably didn't upload it to the right place, which happens, right? So let's see, this is Q2. Is it? Yep, 6 months, all right? So we're looking at 3 months. So, I mean, I'm looking at the 6 months. So 6 months marginal growth in revenue. Operating profit is less here. Admin and general expenses rose by about 60 million. Well, that alone will tell you that the rest will not probably come out well. Finance costs 38 million. So they had, what was their finance cost before? Because they used to clear debt. So I guess their finance cost wasn't high before, because this is, I'd have to go back through the prospectus. Yeah, so I mean, I think the person who was saying waiting for Ari Williams to go back up, I think based on the report, because for the 6 months they're 7 million versus 54. So I don't know what, maybe they invested in something. I don't know. I think they mentioned a new location, but I think that was paid for already, if I'm not mistaken. So I'd have to look at the MD&A because I'm not sure here. All right, so does the MD&A say anything here? Beryl, okay. Okay. All right, so I didn't think that business would be so impacted by Beryl, though. That's interesting. That is interesting. That is very interesting. That's curious to me. Okay, I'm just, speed reading, guys, so bear with me. Okay, all right, so it didn't tell me what happened, right? Yeah. So I think I've kind of said what I wanted to say already. I don't know if you guys have any questions, but I think it has to be focused on growth, and the company has to show growth. Now, I do think that in Atlantic's case, they are actually positioned for it based on what I saw. So I generally don't think it's an issue to use an IPO or APO to clear debt. It just matters in the APO's case, as I said, for Tropical, I'm looking to see how much shares are being issued and at what price. And because that is telling me what the EPS growth will look like, how many shares will they have, because Tropical, I think, has Tropical has 1.3 billion shares already. So I don't know what that will look like. And that is also something that I've noted. Well, that there's so many things I want to talk about. I don't want to get into another topic here. But yeah. Guys, let me know if you have any questions. How you feel about these offers that come out focused on clearing debt? Are you for it? Are you against it? Let me know. Is it something that matters to you? Really? Should it? I don't know. Let me know. I'll pause for a minute or two to see if I get any questions. Maybe I can take a Dolphin Cove question now, but I don't know if I want to talk about Dolphin Cove tonight. Jermaine, given that the director's comp will be issued by dividends going forward, do you think they'll issue stock options? Who are you talking about? Atlantic? Let me know if you're talking about Atlantic. Kimar reading class. I had to read that twice. You can reach me in our community. You can reach me on our social media pages. Just send a DM. I mean, I'm not sure what anything that you'd want to ask me privately, you can ask me here, but you can do that. But yeah, just message me on any platform if it's private. And yeah, okay. So Atlantic, you're talking about. Given that the director's compensation will be issued by dividends. Oh, I never saw that, sir. Tell me where that is. Tell me where that is. I'd love to see that. That's interesting. I like that. I like that. That's actually good. Good incentive to grow the company. Right? All right. I think I'll wrap up the stream here. Do you know how? Oh, yeah, man. So I calculated the dividend yield for our challenge community. So we did the math on it. So we know what that looks like. But you calculate it on net profit, sir. Net profit. I think it's good that it's used to be clearing debt. Sir, why are you so curious about my thoughts on Dolphin Cove? My thoughts don't affect the price of the stock, you know. So okay. So if you want to hear my views on Dolphin Cove, I did a video a week ago when it just came out. I share my thoughts there. I talked for about a half an hour, so you'll get my full thoughts on it there. All right, sir. Is that the same when calculating Trans-Jamaica dividend? No, I don't think so. Because what's Trans-Jamaica dividend policy? TJH dividend policy, right? They should have a dividend policy, if I'm not mistaken. I mean, so I just know that with Trans-Jamaica, Sean, if you think about it, they're optimized to pay dividends. So here's the thing, guys, and this is what I noticed. I was talking to somebody yesterday. I don't want this channel to be about Trans-Jamaica, Dolphin Cove, right? There are 100 other stocks on the market. So I don't want to keep talking about the same stocks because persons are going to think I'm biased and persons are going to think that I'm trying to hype up the stock or something, because some persons, I'm sure, think that way as well. That's not my intent. So page 61. What paragraph, sir? Tell me the paragraph. So I'm looking at page 61 now. Director. Okay. How did I miss this? Directors' emoluments will be reduced. I'm sure I saw it. That's good though. That's awesome, actually. That's awesome. I mean, the directors, I don't know if they need the money. That's a different conversation. But sir, if you saw the video, then what else do you want me to say, Mr. Kimar? I'm still a shareholder, if that's what you're asking. Meaning if it's all dividend policy or percentage of net profit. No man, so Sean, Trans Jamaica is listed in their prospectus what their intent is for dividend yield based on IPO price. That's what you go off of, right? That's how you do it. Christopher, look in the challenge video archives. So go to your library, go to challenge video archives, and you'll see all the videos. So you'll see a stock review section, you'll see Wigton, Atlantic, and Trans Jamaica there. We did it Wednesday night. I was saying I didn't know how to feel as yet, so just check to see how I feel. No, I feel good. I like the company. I think that they're going to be able to pay me a dividend. If they don't pay me a dividend, then I'll feel differently. So you can wait. If they pay a dividend, Jermaine is happy. If they don't pay a dividend, Jermaine is sad. Okay? I don't know if I'll ever be on Elevate again, but yeah, that was a few years ago. All right. The thing about Atlantic IPO is that I don't know where it would fit in my portfolio because it is not growth stock. Sean, that's the thing though, because I think they will grow. I'm just not sure how soon they will grow. That's the thing. But it does appear to me like it's going to be a solid company long term. That's what I'd say. Thank you, sir. I feel like I was being interrogated. So I'm a shareholder. If they don't pay me a dividend, I'll no longer be a shareholder. Put it that way. All right. Yeah. So it's kind of unique, and I do like unique companies. Actually, I think unique companies are good. I think one, it's hard to value them, which makes it interesting. Because sometimes I think they're overvalued, sometimes they're not. So, for example, with Trans Jamaica, it's unique. You can't really compare them to anyone else. They don't have any competition on the market, so you don't know really how to compare them, which I think is actually awesome. Because if you don't know how to compare a company, then you may have a situation where the sky is the limit. Because if they had another Trans Jamaica on the market, then you could say, so just like how persons are comparing his RPL's price gonna catch up with FESCO, you have that comparison because they're both in the same industry. You can't compare Trans Jamaica because there's nobody in that industry, which is awesome, right? I don't see them as a dividend stock right now. So I see them as a dividend stock in 2026. That's my take. 2026. And I see actually a very healthy dividend yield if things go, yeah. So, yeah. Yeah. Guys, I would say make decisions on offers based on the information they give you, right? Speculation is good, but it's not likely to be accurate. Make decisions based on what they give you. There are multiple opportunities to buy a stock. It's not only the IPO, it's not only the offer for sale for Trans Jamaica, multiple opportunities. And I'm actually going to do a video on that as well, but I'll see. All right, nobody's asking me any questions, so I'm going to go now. I feel like just doing another live stream talking about something else, but yeah. Let me do a call to action before I go here, guys. If you will oblige and allow me to share this. I wanted to share this with everybody because I think right now actually is a really good opportunity for me to share this with you guys. So let me do this here. So I'm actually inviting you guys here to join our monthly investment challenge. Now, a lot of persons ask me, for example, I've gotten a lot of messages in the last couple of days. Jermaine, what do you think about the Trans Jamaica offer? What do you think about the Atlantic IPO? What do you think? What do you think? And so the investment challenge allows you to learn to have a process to do your own research, to understand the market. This month, actually, we're going to be covering like market orders. We're going to talk about things like the circuit breaker. We're going to talk about things like how to understand the queue, what the order types are like, and that kind of thing. So, and when you join, you get access to all the sessions that we've done. So, for example, whenever there's an offer on the market, we cover it in the challenge community. So that's almost like bonus videos. Persons also get to vote on their stock reviews. If you notice, we haven't been doing the stock reviews on the channel anymore. We're saving those for the challenge. We have a mid-month call where we have a special guest. I actually have a CEO in mind for next month. A CEO that might have a company that may list in the future. Who knows? And so yeah, I think it's a great opportunity to join. You can join monthly or you can lock in for the entire year. And so I think, a few persons from the community are here and the feedback has been awesome, right? I think I have a testimonial here. So this person, Carlisle Grant, joined and said during the challenge, he made adjustments to his portfolio based on what he learned and have already seen positive growth. More importantly, he now has peace of mind with the investments he's made. He's realigned his portfolio to focus on income stocks while understanding how to balance capital gains and value stocks. Truly grateful for the experience. The challenge has been well worth the investment, and I highly recommend it to anyone, right? So just wanted to share that. Well, I think MFS is still suspended, if I'm not mistaken, right? So yeah. I did not check it out yet. Are they good or bad? Loving. Why it sound like you want me to check it out? Let me see if any questions on IG. Okay, so I'll wrap it up here, guys. It's RPL. I don't know why they would be bad, but let's see. So I think that's a perfect example of why somebody would say I'm biased. Okay. What do you mean pleasantly surprised? What's wrong with you, sir? What's wrong with you? Ooh, I like this. See, this is a perfect example of what I'm saying. A junior market company should be growing. This is a perfect example of it, right? Where were they when they were listed? They've been listed, I think, almost 2 years now. This is the kind of growth that I'm talking about, right? Junior market company, I don't know what their revenues were the year before, but I think it was maybe half of this or something like 300, 400 million. I know they're at 1.6, right? That's what a junior market company is supposed to do, grow. I need to check out that margin though. Interest income, admin expenses. Admin expenses have doubled because I have more staff. Selling and distribution, that cost is low. Finance costs, we know they're paying the bond from GK? I wonder if they're gonna try and clear that early. They probably could, but it's 8 million. This is wonderful. That's awesome. So EPS doubled. So there you go, sir. Yeah. Very, very proud of RPL. Good stuff. All right. So I should have probably lead the video with that. That's all, guys. I think that's a perfect way to end the video. A junior market company is supposed to be growing. Look at Dollar Financial as well. I think 400 and something million last year. I think when they listed, they were doing maybe 75 or 100 million, if I'm not mistaken. But that's the kind of growth you're supposed to have as a junior market company, right? So, all right, guys, I'll see you in the community. Probably do a live stream tomorrow. I don't know yet. Depends on the time I get in. So, all right. Take care, everyone. Have a good night or morning, depending on the time you're watching. I'll see you again soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at Learn, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.